This is Frank Islam, Chairman and CEO of FI Investment Group and your host of Washington Current Review, where we interview leading voices from business and politics that impact you, the viewer. Today, our guest is Chaya Kundra. She's an attorney. She will discuss offshore accounts and taxes. Thank you for coming to the show, Chaya. Appreciated that very much. I know you're a pretty busy person. Thank you for coming.
Thank you so much for having me. I appreciate it.
You're most welcome. So tell us about offshore accounts. Should we pay attention to it? IRS is really behind it, trying to engage themselves with these offshore accounts. Not only the individuals, but the bank as well.
That's right. That's right.
Yeah, tell me a little bit about it.
Well, we absolutely should be paying attention. And we should be paying attention because most of us, especially in the Indian community, happen to have offshore accounts, whether we inherited them, whether we had them before we came to the United States, whether we went back and visit India so often that it makes a lot of sense for us to have an offshore account. Why should we pay attention? Back in 1970, the Bank Secrecy Act created a law that basically said that if you have over $10,000 in the aggregate in any foreign bank account, you must report it on A, your federal income tax return, the Schedule B, and B, you must file what's known as a Form F-bar. It's F-bar known as a Form TD 90.22.
Okay, so that's what you're supposed to do.
That's what you're supposed to do.
So what happened then?
So what happens now, or what has been happening, is a lot of us have heard about this UBS, and everyone's going after these offshore accounts. And now we've even heard that the IRS and the Department of Treasury and the Department of Justice have actually even gone to India and Singapore and Hong Kong and are saying, well, HSBC, what about all these people that happen to have foreign bank accounts? We're worried that they're not reporting their income. As U.S. persons, we are required to report all income earned worldwide. So if I happen to have a foreign bank account.
So if they don't send the statement, some of the banks send you the statement. I think I have an account with Citibank, so they send me the statement, so we pay the taxes for that. Right. But that's not the case with the other banks that you're talking about. SSBC is one of them, I guess?
Right. Well, some banks send statements and some banks don't.
So that's a secret money.
Well, it can be secret money if we don't disclose it, right?
Okay.
But the rule is that we're supposed to disclose it. So regardless of whether your bank sent you a statement or not,
you're supposed to
disclose it.
The amount more than $10,000.
Well, there's two things that we do disclose.
Okay.
First is, for those of us who are familiar with the Schedule B, that's where you report interest income earned.
Right.
If you happen to have a foreign account, a lot of times we have foreign accounts because we earn more interest overseas than we might in our U.S. accounts. So what happens is that the IRS says, well, tell us how much you earned in interest so we can tax you on it. At the very bottom of that, so you first report your interest, then you report your dividends. At the very bottom, it says, do you have a foreign bank account? And you're supposed to check yes, if you actually do. Is that foreign bank account more than $10,000 in the aggregate? If so, you may have a filing requirement on the TD.
Even if the amount is in local currency?
If the amount is in local currency,
you still have to report it.
If it is in a foreign institution, you have to report it. So take your Citibank account. Your Citibank account is probably an NRI account or an NRE account in India.
Right.
You would still have to report that foreign account in the United States on your 1040.
And let's suppose State Bank of India is a good example. Same thing?
Same thing.
Okay. Very good. So what's the IRS voluntary disclosure program?
So what happens is that because the IRS is looking for, because our government needs to get some more money into its coffers, what's happening is that the government said, well, this is a great way. This has been in the books for a long time. Why don't we say, all of you have foreign bank accounts. We need you to tell us about them. So what's happened is that there's always been a program known as a voluntary disclosure program. And what happens with that is that's when I say, IRS, you haven't contacted me. I haven't been audited. No one's been on my back. But I want to tell you that I might have forgotten to report a little bit of income, or I might have overstated some expenses, or I might have forgotten something.
If you don't bring that earning from the Indian bank or from any foreign bank, you still have to report it and pay taxes.
Absolutely, even if you leave it overseas, even if you move it from one bank to another, in another country, you still have to report it.
Okay.
So in a voluntary disclosure, you're basically saying, hey, instead of you coming to me, I'm going to come to you, government. And as I come to you, what's going to happen is that you're going to take favor on me, and you're not going to prosecute me, in this case, criminally. So the beauty of the voluntary disclosure program is the IRS is now saying, listen, come forward, tell us about your foreign accounts, and here's the deal. For the current voluntary disclosure initiative, which was just announced in February of this year, we're going to go back 8 years. You're going to tell us about your foreign accounts by either amending your returns, most often either amending returns or filing them for the first time, because we have a lot of people overseas that have never filed U.S. returns that are required to do so, and filing the FBAR forms. And what we'll do in exchange for that is we won't criminally prosecute you. We also won't go after the highest penalty, which is $100,000 or 50% of the highest value in the bank account for every year that you have the bank account. Instead, we'll either charge you a 5%, a 12.5%, or a 25%, depending upon the amount of money in the accounts and depending upon your relationship with the accounts. That's the penalty we'll assess you, and we won't give you any jail time.
What about if the bank doesn't send you the statement? You don't even know what the earning is.
Great question. A lot of times the bank won't send you the statement. Most of us, however, do keep track of how much money we have over.
You have something Indian currency, 20 lakh rupees in some of the bank, as an example.
Right.
And they plow that earning back in the account, but they don't tell you how much earning you have received. So what do you do with that?
You're going to have to go to your Indian bank.
Okay.
And you're going to have to ask them to send you statements.
Isn't that the onus on them to give you that statement and telling?
Well, we'd like it to be.
Okay.
Unfortunately, it's not. The onus is on us. But what the IRS says is that if you can't get a bank statement, then you let them know, and they'll do what they can to help you get it.
Okay, I got you.
In an effort to make the voluntary disclosure also, if you happen to have counsel assisting you, one of the things the IRS says is show us that you've tried to make efforts to get these statements. So a lot of people just call the bank. Instead of just calling, follow up with an email, follow up with a fax, follow up with a letter, have an attorney write a letter for you requesting the documentation, and say to the IRS, look, I've done everything I can. I think I have maybe 50,000 in that account. I'm not exactly sure, but this is all the documentation. Help me out, IRS.
So who qualifies for the program, who don't?
Who's going to qualify for the program is pretty much all of us would qualify for the program. I won't qualify for the program if I'm under audit. I won't qualify for the program if I'm under criminal investigation. Again, it goes back to voluntary disclosure, and a disclosure isn't voluntary if you're scared that the IRS is actually caught on.
So when do I make the disclosure and what is involved?
Well, you want to make the disclosure as quickly as you can, because you want to make the disclosure before the IRS gets you. So for example, the HSBC accounts, a lot of people, you mentioned Citibank.
Sure.
Most of us that are of Indian descent or have Indian contacts will have a Citibank account. It's the easiest thing to do. It's in America and it's in India, and they have branches all over the place.
Correct.
HSBC is the same way.
Right.
But HSBC is now going to start giving the names of its people.
And sending you the statement for the earning as well, so you can pay the taxes.
Right. Well, hopefully they'll be sending the statements, but But you don't want the IRS or Department of Justice to get your name before you give them your name. So the first thing you would do is do what's known as a pre-screening. You'd go ahead and let the IRS know that you want to make the disclosure. And in the pre-screening, you just give them your name, your social security number, your address, and you say, I want to make a pre-screening. And usually they get back to you within 36 to 48 hours with a yes. Or if it's a no, then you definitely need to call a lawyer. And then after that, they give you 30 days to submit what's a bit more of a detailed template. And it sounds simple because it's just a template, but they ask you a lot of questions to the effect of, not only how much do you think you had in the account, not only how much do you think you made off of the account, but who helped you set up that account? Was there somebody in India? Was there somebody in America? Did somebody convince you or otherwise suggest?
What about the bank convince you?
Exactly. Who at the bank helped you?
Okay.
Some of us just say, well, my friend Sumit told me,
sure.
hey, open that bank account, right?
Sure.
But a lot of times, like what you find with the indictments that are coming down, people at HSBC, people at UBS, they actually said, hey, Amit, you have $1 million. Why don't you put that in this account?
And you will get a free earning. You don't have to pay taxes on those.
No one's going to know.
Okay. Well, that to me is a criminal.
Well, that to the IRS and Department of Justice is also criminal. So
what if I decide not to conform, or not me personally, but people who decide not to conform to the program? What is the penalty?
So the penalty,
besides go to jail.
Right. Well, remember the jail penalty will depend upon how much money you fail to report.
Okay.
And pay.
Is there
a
limit to the dollar?
There is no limit to dollar amount. How the United States government usually determines the amount of time that you will spend incarcerated will really depend on the amount of tax loss to the government, as well as the type of infraction. So for a crime such as this, you have two types of infractions. One is that you fail to report the amount that you actually owe. So then you're looking at an evasion charge. The other thing is going to be that you fail to file the proper forms. So right now, basically the penalty is about 5 years per year, $100,000 or 50% of the highest amount in the bank account for that year. So
not the earning, but the account itself.
the account itself, which is
You made the money in the
worse,
account, which is a lot more than.
which is a lot more. Exactly, exactly.
Okay. What if I decide to close my accounts, and would that solve the problem?
Right. So that's the beauty of taxes, right? Everything happens
You close the
retroactively.
account, so you close the account, what do you do with that money? You got to park it somewhere.
Yeah, well, so most of us, when we close it and we get really nervous, decide that we're going to go ahead and repatriate it back to the United States.
Yeah, but they usually don't.
But, okay, that's
So
true.
what about they don't convert the currency into rupees, for example, in India, to Indian rupees currency to the dollars? What do you do with that?
You're still
You go spend it.
You could go spend it, you know. But the thing is, and the truth is that you're allowed to have a foreign account. Nobody has ever said you can't have it. In fact,
You just have to report it.
you just have to report it, and the government just wants its fair share of tax on it.
I got you.
Whether we call it fair
That's the
or
bottom
not.
line here.
But that's the bottom line here. But to go back to your first question, which was, well, what if I close out my account? What's
Yeah.
up with that? Well, the truth is that you've already committed the offense, right? Because you already filed a return, perhaps by saying that you didn't have a foreign account. You've already failed to file an FBAR. You've already failed to report the income. So whether you close it today or you close it tomorrow, it's not going to make that much of a difference, short of a specific type of business account that you might have, in which case the IRS may be willing to work some deal out with you if you happen to have a foreign business that you set up, but you didn't necessarily report. There's an additional type of form that you have to file, and you promise the government that you're going to close the company
So it's
down.
both for individuals but for corporation. The corporations, people, you know, there are corporations you do business in India,
Right.
and you open an account in Indian currencies to give out those money to the employees. It's the same kind of law applies to both, whether you're an
That's
individual
right.
or the corporation. Am I correct?
That's exactly right, because a U.S. corporation is considered a U.S. person for tax purposes.
Does the IRS consider individual circumstances? For example, that if a person did not know about the accounts or did not touch the account, or did not know anything about it.
Right? It absolutely does. So remember we touched upon the
It's a mystery account.
It's a mystery account. It's a bonus account.
Right.
It's lucky you have $1 million and you didn't know about it.
Right.
The IRS has that regime that we talked about earlier. Prior to the current OVDI, the Offshore Voluntary Disclosure Initiative, there was one that was introduced in 2009. And in 2009, you had a flat 20%. This time, in 2011, what they're saying is, well, you know, maybe that flat 20% isn't fair because it's not encompassing all these different types of people. So what we're going to do is we're going to do the 5, the 12.5, and then the 25. So in order for me to do the 5, I have to be like you said. I didn't know about the account. Maybe my parents set it up in my name and didn't bother to tell me, because in India you can do that.
Sure.
In America you can't do it, but in India you can do it, right? I didn't necessarily know about the account. The funds that were invested in the account were by Indian nationals who don't have a U.S. obligation.
Sure.
I had less than, maybe I touched $1,000 in that account. In those situations where you're somebody who doesn't really have any interaction with that account, then maybe you're looking at a 5% penalty because you just really didn't know. You can look at the second one is the 12.5%. If I have less than $75,000 in that account over the 8-year period, I'm looking at a 12.5% penalty. Everything else, I'm looking at 25%.
2.5%.
12.5%.
12.5% not on the principal, but on the earning.
12.5%
On the principal.
on all of it.
On all of
Principal
it.
plus the earnings. So
Which is a pretty
whatever's-
high. Where do you get that 2.5% earning anywhere in the world?
Right. Well, it's on the balance.
Oh.
On the balance of the account. But if you do find an account that is earning 12.5%, let me know too. But,
Yeah, well, me too.
But it's on. It's 100% of what is the value of the account.
You're
balance
talking
of
the principal and
any
interest
accruals.
on any accrual on the earning
Right,
you're talking about.
right, exactly.
Does it matter if I pay taxes in the other country?
It does matter. So what you said was, and what we were talking about was, well, what if I'm one of these different, perhaps I lived abroad, and living abroad, I actually paid my taxes abroad.
Sure.
And I thought I was doing everything right. I didn't realize that I was going to have to pay taxes in the United States, in addition to having to pay taxes in Malta.
So double taxing.
So it's a double taxing. Well, so what ends up happening is that, as you know, we have lots of tax treaties with lots of countries.
Sure.
So the IRS is going to take into account the fact that you believed you were doing the right thing. In order for the government, the whole basis of them coming after you for a criminal action is they must show one of the most important factors, which is intent. For those of us
Intent of committing crime.
intent to commit a crime, intent to
Commit a
evade
fraud.
tax.
Right.
So if I'm somebody who happened to have just, like you said, gotten this account, and my mom calls up and says, by the way, Chaya, I didn't tell you this, but I've saved you all this money for the last 10 years.
Yeah.
Great, thanks, Mom. But I didn't have any intent to fail to disclose.
Sure.
So, and in those types of situations, if you really think that the penalty regime that you'd be looking at may not be the most favorable, like maybe I have more than $75,000 in the account, I don't qualify for the 5%, but you know what? I don't really think it's fair that you can tax me, you can assess me a penalty of 25% of the highest balance. That's not fair. Well, then maybe what I can do, if I have reasonable cause, if I have enough evidence that shows that I didn't intend to lie or evade taxes, then I can go ahead and decide to opt out of the voluntary disclosure program and talk to the Internal Revenue Service about looking at trying to get a lower penalty.
But you'd still be penalized?
I will still be penalized.
Regardless the percentage we're talking about here?
Regardless of the percentage. But it's a civil dollar penalty is often so much better than any type of criminal incarceration.
Okay, so that's the difference.
There's a difference, right?
So who can help me with the disclosure process? Can I do everything myself, or do I need an attorney?
Great question also.
I'm sure you need an attorney.
Yeah, well, no, actually, you know, the thing about our judicial system is that we've created it, you know, maybe we can't perform surgery on ourselves,
sure.
but we've created it that, you know, you can actually do everything on your own.
Sure.
So you could make a voluntary disclosure on your own. The only question is, you know, what you want to think about is, when I'm doing something that I think is innocent, or when I'm doing something and I'm trying to tell you the truth, sometimes it doesn't come out like I necessarily want it to come out, or sometimes it may sound a little...
So it's not quite kosher.
Yeah, but I'm just telling you because that's the way I speak, or that's the way I think,
sure.
and you know, it's all good and everybody's fine, and
sure.
a lot of times it's really beneficial to have legal counsel help you with making sure that your disclosure is adequate and proper, and you're going to want to make sure that when you do the amended returns, because here's the key to the voluntary disclosure, it must be accurate and complete and 100% correct.
To the best of your knowledge.
To the best of your knowledge.
Now tell me how people can get hold of you.
Oh, to get a hold of me.
Yeah, so that if somebody got into this kind of situation, call her. Ms. Kundra, can you tell us a little bit to the audience how the people get a hold of you?
Sure, you can either contact me by we have a website, kundrataxlaw.com, which makes it easier.
Sure.
Kundra taxlaw.com, or my phone number is 301-424-7585. 301-424-7585.
And your email address?
It's ckundra at kundrataxlaw.com.
Wonderful. Thanks you very much.
Thank you so much. I appreciate the opportunity, sir.
You're most welcome.
Thank you.
And thank you for watching. This is Frank Islam wishing you a great week. Thank you very much.